Hello, everyone. Welcome to the market opening bell on Wednesday, July 23rd, your 10-minute guide to the stock market. U.S. Treasury Secretary Bessent will meet with China's finance minister next week to discuss possibly extending the August 12th deadline for tariff increases. The Hang Seng Index opened 30 points higher on Tuesday, reclaiming the 25,000 mark at the start. Despite an early dip of 93 points to 24,900, it later rebounded, closing at a high of 25,130, up 135 points or 0.5%, marking three consecutive days of gains. The H-share index rose 35 points or 0.4% to 9,075, and the Hang Seng Tech Index gained 21 points or 0.4% to 5,606. Total turnover was 266 billion Hong Kong dollars. Southbound funds net bought 2.717 billion Hong Kong dollars in Hong Kong stocks, including net purchases China Life Insurance totaling 878 million, China Construction Bank 755 million, SMIC 511 million, Meituan 382 million, Huaxin Cement 339 million, China Longgang 263 million, Dongfang Electric 206 million, Ecosol 157 million. Net sales Guotai Junan International 155 million, Tencent 102 million. Southbound funds have net bought SMIC for 4 consecutive days, totaling 1.175 billion. Technically, the Hang Seng Index held above 25,000 needs consolidation with the next target at 25,400, followed by 25,700. Mainland China markets continue to rise with increased turnover. The Shanghai Composite Index gained 22 points or 0.6% to 3,581. The Shenzhen Component Index rose 92 points or 0.8% to 11,099. The Chinex Index increased 14 points or 0.6% to 2,310. Combined turnover in Shanghai and Shenzhen was 1.893 trillion yuan, up 193 billion yuan from the previous day. The renminbi central parity rate was set at 7.146 to $1, up 62 pips from the previous day, hitting the highest level since November 8th last year. Southbound funds have net bought 800 billion Hong Kong dollars in Hong Kong stocks this year, nearing the 224 record of 808 billion. Analysts predict total southbound flows may exceed 1 trillion Hong Kong dollars this year, but growth may slow in the second half as mainland mutual funds and insurance institutions face depleting funds. Estimates suggest mutual funds nearing the 50% Hong Kong stock holding cap can add up to 100 billion Hong Kong dollars in the second half, while insurance firms have about 200 billion Hong Kong dollars in capacity. Broker reports indicate mainland public funds increased holdings in small and mid-cap stocks in Q2, with the Hang Seng Small and Mid-Cap Index constituents share of fund holdings rising 5.6 percentage points, while Hang Seng and Hang Seng Tech Index holdings fell 4.4 and 8.3 percentage points, respectively. By sector, funds added to pharmaceuticals, light industry, non-banking financials and banks tied to innovative drugs, new consumption and dividends, while reducing exposure to tech stocks like internet and automotive, which surged in Q1 due to DeepSeek catalysts. A news report suggests the mainland government warned of closing overproducing coal mines, boosting coal stocks. China Shenhua, Yancoal and China Coal rose 4.8% to 9.5%. Social media reports indicate the National Energy Administration is conducting a month-long inspection in 8 provinces, including major coal hubs, Shanxi, Inner Mongolia, Shanxi, and Xinjiang, to curb excessive mining that distorts the market. The National Press and Publication Administration announced July approvals for 127 domestic online games, including 选女战记 and 征战秘境, published by Baidu's Beijing Baidu Doku Technology. 7 imported games were approved, including Diablo 4, operated by NetEase. In June, 147 domestic games were approved, including Po Jie Li Fang by Baidu Doku and 11 imported games, including Crossfire Rainbow by Tencent. Chow Tai-fook reported Q1 financial year 2025 operating data. For the 3 months ending June 30, retail value fell 1.9% year-on-year, with mainland China down 3.3% and Hong Kong, Macau, and other markets up 7.8%. Same-store sales in Hong Kong and Macau grew 2.2%, while mainland China saw a 3.3% decline, though the drop narrowed, and franchise stores' same-store sales stabilized. The group continued closing underperforming stores and selectively opening higher productivity ones, closing a net 311 Chow Tai Fook jewelry retail points in mainland China and opening a net one in Hong Kong and Macau. US President Trump stated that Chinese President Xi Jinping has invited him to visit China and he may meet with Xi in the near future to address the increasingly tense trade and security situation between the two countries, hinting at a decision soon. However, investors focused on earnings from major companies and the latest remarks from Federal Reserve Chairman Powell and other officials. US stock indexes showed mixed performance. The Dow Jones Industrial Average rose 179 points to 44,502 by close. The Nasdaq fell 81 points or 0.4% to 20,892. The S&P 500 edged up 4 points to 6,309, setting a new closing high, the 11th this year. The Golden Dragon Index, reflecting Chinese concept stocks, gained 1.7%. Reports indicate that SoftBank and OpenAI's $500 billion AI project Stargate is currently stalled, pressuring chip stocks. Broadcom fell over 3%, while Nvidia and TSMC dropped 2%. Alphabet and Tesla set to announce earnings today, bucked the trend, rising 0.7% and 1.1% respectively. General Motors reported a 35.4% year-on-year drop in Q2 net profit to $1.9 billion US, with adjusted earnings per share of $2.53 US, beating expectations of $2.44. Revenue fell 1.8% to $471.2 billion, also exceeding forecasts. Tariff impacts amounted to $1.1 billion. Vehicle sales were 974,000 units, below the expected 1 million, with electric vehicle sales at 46,300 units. Coca-Cola reported a 58% year-on-year increase in Q2 net profit to $3.81 billion US, with adjusted earnings per share of 87 cents, surpassing expectations of 83 cents. Revenue grew 1% to $12.62 billion US, slightly above the $12.54 billion forecast. The company lowered its full-year comparable EPS growth forecast to 3%, the upper end of its prior range, while reaffirming its profit outlook. Our stock pick today is Drinda, stock code 2865. Drinda primarily focuses on the research, production, and sale of high-efficiency photovoltaic cells, leveraging innovation and key technologies. The group has maintained a competitive position in mainstream PV cell technologies, including N-type TOPCon and P-type PERC cells. According to Frost & Sullivan, based on 2024 shipment volumes among specialized manufacturers, Drinda holds a global market share of approximately 24.7% for N-type TOPCon cells, ranking first, and about 17.9% for overall PV cells, ranking second. In In the same year, among both specialized and integrated manufacturers, the group's market share for N-type TOPCon cells was around 7.5% and for overall PV cells about 5.6%. The group operates production bases in Shangrao, Chuzhou and Huai'an with an annualized PV cell production capacity of approximately 44.4 gigawatt as of December 31st, 2024, all dedicated to N-type TOPCon cells. PV power generation converts solar radiation directly into electricity using PV cells. Its advantages including environmental friendliness, low cost, wide distribution, and high safety make it the fastest growing renewable energy source. Compared to other renewables like wind and hydropower, PV power is more adaptable to various scales, benefits from widely available resources, and faces minimal geographical constraints. Consequently, in terms of cumulative installed capacity, PV power is expected to become the largest source of renewable energy globally by 2027. To utilize solar energy more effectively, PV cell products are transitioning from P-type PRC to N-type cells. Among N-type cells, TOPCon cells lead the commercialization trend and are expected to remain the primary beneficiary of the shift from P-type to N-type. This is due to N-type TOPCon cells having achieved large-scale mass production, making them more mature and cost-effective compared to other N-type cells like XJT and XBC. By September 2024, leading PV cell manufacturers had improved N-type TOPCon cell conversion efficiency to around 26%, further solidifying their competitive edge over other technologies. Meanwhile, N-type TOPCon cell shipments and market share have grown significantly, with market share rising from 23.5% in 2023 to 66.9% in 2024, projected to reach 70 to 80% by 2030, with a compound annual growth rate of 14.6% from 2024 to 2030, maintaining its status as the mainstream market technology. Recommendation buy at 23 Hong Kong dollars, target $25.5, stop loss at 21.8 dollars. I do not hold the above mentioned stock.